With trade tensions easing between the world's two largest economies, should investors be looking for some potential opportunities in China? Joining us now to discuss is Haining Zhao, VP and Director for Asset Allocation with TD Asset Management. Haining, great to have you back on the show.
Thanks for having me. Always great to be here.
Always great. And there's always so much to talk about when we talk about China and the U.S. The story seems to change right now. We seem to have a bit of an easing in tensions. Explain to us where we are right now.
Yeah, actually, U.S. and China just finished the latest round of negotiation and a deal was struck. And to be honest, we expect this round of negotiation to be a little bit tougher. And it turned out to be super smooth. After one round of negotiation in Malaysia and then the leaders summit in APEC summit, and then a deal was done. So the reason we expect it will be tougher compared to the previous rounds is this time, on the China side, they launched the export control on rare earths. And for China, it is one of probably the bargaining chip that carries the most weight. So if you think about negotiation, if you are going to use it to exchange for something else, then it needs to be of similar weight. And I think from the China side, it will be the loosening of U.S. export control on technology, which, for national security reasons, obviously it is very politically difficult. But in the end, both sides reach a deal. So I think it eliminates a major tail risk for the market.
Now that they've reached this deal, and you said it was easier than thought, obviously they're not best friends still. As we look further down the road, what can we expect from this relationship?
Right, and even after the deal, there is still some uncertainties. For example, on both sides, the interpretation of the deal terms, they could vary slightly, but we don't think it's impossible to bridge. So that is a minor issue. And also the number two uncertainty is early next year, in April next year, Trump is going to pay a visit to China. So will we see another cut in the so-called fentanyl tariff? That will be good news for the market. And the third market, I think, hovering on people's mind is, will NVIDIA be finally able to sell chips in China again? And I think for that, in our opinion, the answer is probably no. Because for the latest generation of chip, it is, again, politically impossible to sell it from U.S. perspective. But if lagging one generation, China don't really need it. Actually, a few weeks back, you are seeing the news report that China Custom actually launched very active crackdown on the smuggling of NVIDIA chips, which is a dramatic contrast compared to, let's say, 6 months ago, where, these chips actually flow to China through some secret channels.
Right, so clamping down on that. So that's the relationship between those two trading behemoths. What about internally in China? I understand they've had their fourth plenum meetings. What are the takeaways from that?
Yeah, fourth plenum. The plenum meeting is a very important window to observe the policy direction in China. And this fourth plenum is super important because there is one important document that is the proposal on the 15th five-year plan. So why it is so important? So if you remember, about 10 years ago, China launched Made in China 2025. That is essentially originated from the 13th five-year plan, and then 5 years later, 14th five-year plan. So if you look at the Made in China 2025, it was very successful. So among the 10 key areas mentioned in the proposal, in the plan, for example, high-speed railway system, latest information technology, for example, semi and AI, they both belong to information technology, and shipbuilding, the aerospace. In many areas, the China scorecard was really good. So there was someone doing the scorecard count. They found out more than 90% of the goals are achieved. And look at the China manufacturing capability, not manufacturing capability, but a high-end manufacturing capability today, it is night and day compared to 10 years ago. That's why this document is super important.
That sounds like the kind of steps that could get an economy on a solid footing. What is the state of China's economy right now, and how could investors, play that?
Yeah, so if you zoom out a little bit and look at the big picture, the real pain point in the Chinese economy is still the real estate sector. It drags down the capital investment and through the wealth channel, it also dragged down consumer sentiment. So it essentially dragged down everything. And we are already more than 4 years into the real estate correction, and we are still exploring that bottom. So that is the bad news. But there is also a positive element in it, which is because the economy is still sluggish, so the policy is really, really easy, both on the monetary and fiscal front. For example, on the monetary side, if you look at where the Chinese interest rate level is, the short-term rate is roughly at 1.4%, which is among the lowest across the major economies. I think the only two countries that are lower than China is Switzerland and Japan. They are, almost forever hovering in a very low-rate environment. And even if you look at the longer-term rates, for example, the 10-year Chinese government bond, it is only 15 basis points higher than the 10-year Japanese government bond, which is amazing. So all of these set up a very, favorable policy environment. And on top of that, if we are right that the real estate correction is gradually coming to an end, not say they will rebound sharply, but they will plateau. And also in the next 2-3 years, China also have this technological breakthrough, then there will be further upside in the economy.
Are Chinese stocks starting to react to this reality, or is there still opportunity in them?
Yeah. Earlier this year to date, you are seeing this reaction because of the technological breakthrough. There is a massive re-rating on the Chinese tech names. So year to date, Hang Seng Index is more than 30% up. So things look promising there.